good day, good morning, wherever you are in the world. This is Jason Ulrich with Top Shelf Traders. We're thrilled to have you with us today. We've got Eric Long, the CEO of QuantTrade, with us, and we're looking forward to having him present. I'll give just a quick overview. Before I go any further, though, let's just do a quick sound and visual check. I know folks on the East Coast are just coming back from lunch. If you could just give me a quick yes and yes. Let me know that you can hear me okay and that you can see Eric's screen okay. Perfect. Perfect. We've got a good sized group here with us today. And we still have some folks that are filtering in. All right. Well, as mentioned, we have Eric with QuantTrade with us. Artificial intelligence is one of the most talked about and most popular subjects out there. Those of you that have had the privilege of working with this or even have tested or tried a tool or system before, you've come across probably mixed results. But still, a lot of folks are trying and looking for the right solution. Eric's going to be talking with us about artificial intelligence, specifically what it is and why it works, and how you can use it to find the best price predictor. Now, he has a tool and a system that he's going to be walking us through, which would be great. We'll be able to see it in action. There's going to be a brief demo. And by all means, as always, we like to keep these sessions as informal and as interactive as possible. So I'll keep an eye on the questions box, and if you have any questions, please don't hesitate to reach out. We'll go ahead and get them answered, and if we have to wait until the end, we'll go ahead and do that as well. As always, also, these sessions are recorded, so we go ahead and post them, and any of the offers that are made throughout or any of the resources that are shared, we'll see to it that we send a follow-up email to you, even if you have to leave early so you can get the recording and then links to any of the resources that are provided. I often reference the survey that we do. Every few months, we survey the 250,000 plus traders that are part of the Top Shelf universe. And we ask them, well, hey, what is it that you're interested in learning more about? What are some of the topics that you're interested in or opportunities in integrating into your trading? And artificial intelligence is a consistent and, as I mentioned at the outset, very popular theme. So with that, Eric, thank you very much for joining us. It's great to have you, and I'll go ahead and turn it over to you.
Great. Thank you, Jason. It's a pleasure to be here, and I'd also like to thank everyone that has taken time out of their busy schedules, especially at this time of year, to join us in the webinar. And what I'd like to do is I'm going to present this webinar in sort of a multi-step fashion. What I'd like to do is go through more of a formal presentation where we'll discuss basically what artificial intelligence is, briefly, of course, and then go into some of the aspects of it. Also, I'm going to present to you a few what I think are neat examples of AI in action. And with that, let's move forward and start. So, of course, the risk disclosure statement just is a mention that there is risk in trading. And just briefly about us, in case you don't know who we are, QuantTrade is a trading technology company that was founded in 2007. I'm actually one of the co-founders, and we started right in the middle of the Chicago Financial District next to the Chicago Board of Trade. And our emphasis has been in algorithmic trading. So we have designed for others and for ourselves all sorts of different algorithms and trading software, including high frequency trading software before it was called high frequency, and just a diverse group of different types of platforms. We also have a commodity trading pool where we trade some client funds. So just to go over what we're going to cover today, first, I'm going to go into a description of artificial intelligence. It may seem obvious, but there's a few little subdivisions of it that are probably important for you to know, just to feel comfortable with the topic. Then we're going to go into what's called deep learning neural nets. And deep learning, maybe you've heard of it. It's really what the hot buzzword is today in artificial intelligence. This is what most of the focus is on. And it's the concept behind it is to have sort of a general intelligence where you can have an artificial brain that is able to do multiple different tasks. It doesn't have to be programmed specifically for one type of a task. We're also going to present a battle between two AI bugs. Now, one is what we call the metadata ant, and then the other one is a larger six-legged creature, and it's sort of a sumo wrestling game. And what's interesting about it is that it uses a deep learning method, at least one of the bugs does. And well, I'll just let you see it and I'll explain it once we get to that point. Okay, how a neural network works. Now, you know, this is not a webinar on building neural nets, so this is going to be fairly brief and from a high altitude, so to speak. But I think that it's important to go over this just so you have an idea in case you don't know. For those of you that do know, you know, please bear with me while I go through it. But it's going to give you a basic idea of how the neural net actually works and what the difference is between these deep learning neural nets. We'll go into an example of a neural net trading system. And now this is an example of a system that was built by a researcher that I know. And so I'm just simply going to present to you what it is, what kind of results we were able to obtain from it by doing testing, and also what the limitations and weaknesses are and how we can overcome those. The Tradeview approach to AI. Tradeview is a website / portal that I personally have been involved in and I got excited about, because what I wanted to do was create a website where people can go to the site and work with some of the cutting edge artificial intelligence technology that's available and offer predictions and forecasts that are actually something that a person can use in real life trading, getting away from a lot of the theory and a lot of the intricate mechanisms involved. It simply does a lot of the work for you. So what I'll do toward the end of the presentation is discuss what it is we're doing and how it's a little bit different than just the standard neural nets. Okay, a live demonstration of the Tradeview method. I'm going to bring you over to a virtual machine that I have running and just show you some of our software, internal software, and how we're generating the signals for the Tradeview Exchange website. And then lastly, we'll have a Q&A session. However, as Jason pointed out, if you have a question, feel free to put it out there. Sometimes you forget these things as webinar presentation goes on. So I'll do my best to answer those as timely as possible. Okay, so basically what is artificial intelligence? I mean, that's fairly obvious in a sense. It's intelligence that's displayed by a machine instead of natural intelligence by a human or another animal. And the interesting thing about artificial intelligence is that it's really been around for a lot longer than most people think. It started to really gain some ground back in the 1960s, and this really was centered on what's called the neural net. One of the problems or difficulties that a lot of computer scientists had with researching the artificial intelligence was how to create the general intelligence that I mentioned earlier. I mean, as far as creating a system or a brain, so to speak, that can do one certain task, like maybe play chess or just do one single task well and learn how to improve on it. Well, that's something that's been around for a while. But as we're starting to reach a world of information of things and where everything is connected together with the internet, now we're really trying to focus on how to bring in all sorts of disparate pieces of information together and analyze those and be able to move from one task to another task with the artificial intelligence. So this is really where AI is at today. So the AI technique that I feel has the most potential, and I believe many other colleagues of mine and researchers do as well, is the deep learning method. And now it's been around for a number of decades, really since the artificial intelligence has been taken seriously. And so the difference, though, between the deep learning rather than what I mentioned earlier, such as the specific algorithm for doing one task, is that there are multiple layers and there's an architect to the neural net. And what it does is that particular neural net is almost what you might say a flexible neural net, in the sense that it can design itself to some degree. So this is where it starts to collect information. It retains that information, associates it with new information, so it's adaptive. And by doing that, it actually is not just learning based on a specific environment or a set of situations, but it's pulling from all sorts of different sources. Now, this is what we're really thinking of when we watch different sci-fi movies, or we think of the robots of the future, where the AI mechanism may allow the brain to actually create, dream, and feel the world almost like we do. So here we have compliments of openai.org, which is doing some real wonderful things in the world of AI. A video of 2 artificially intelligent bugs. And they call this red one the ant, although it has 4 legs. And the other one, the green one, is a 6-legged bug. And you can see that the green one is larger in terms of mass, and it has more legs. So it has an advantage in terms of pushing out this red ant out of the box. So think sumo wrestling. So what I'm going to do is turn this video on, and you're going to see some interesting things. The red ant is programmed with a deep learning method that accesses lots of different types of data, and it remembers what it had learned before and takes that information and associates it to new environments. So let's start it, and you can see how it works. Now you can see that the red ant, the Mediterranean ant, is having some difficulty here. But after a few sessions, and of course this has been done over thousands of repeat sessions, it begins to learn the weaknesses of this green bug. So it's going to continue to combat it, and now it's starting to win against the green larger bug. So you can see that it's having a great deal of success, all based on self-taught AI functionality. Now you can see this is the end, and I think that they did a wonderful job of portraying the victor there. But you can see that this is, whoops, this is a technology that definitely has some fruit, and we can also use that in our trading. So let's go on to discuss what a neural net is. Okay, so you can think of it as what's a sort of a nonlinear modeling set that's structured like your human brain is, or any animal brain for that matter. At least that's the goal, or was the goal originally when it was developed. So the neural net's really a connection of just a group of different electronic neurons, and they're doing different things, and they're weighing information. And the idea really comes directly from biology, just the same as the human brain. And what's great about neural nets is that you can fit a large amount of nonlinear data. In other words, data that doesn't have one specific outcome based on what the input is, to a large set of data, and then you can come up with a forecasted outcome. So the big difference between that and a lot of other types of programming is that there has to be a specific response, specific output for specific input. But with the nonlinear neural nets, that's not necessary. It'll find the best fit. So again, I put here that the building process is similar but more complex to fitting a line to a set of data points. So if you can think of it as a huge group of points, and you're forming curves, and maybe the lines don't always connect, but you have the closest one, that's what the neural net's going to identify. neural nets can be trained with data to accomplish a certain task. I mentioned earlier the chess example, which is a common one used in artificial intelligence and neural nets. And what that means is that the neural net's taking a large amount of data, which would be, in this case, different moves, chess moves, storing it, and then it's going through that and looking for what it may have seen in the past that works. And if it doesn't find something that's exact, it's going to find what the closest thing is. So there's a training process involved. And once it's trained, there's what I call the sort of the computation phase, where it's the thinking phase. And we don't really know exactly what's going on in that area, so it's black. So we call that a black box. Now, the idea of being deep, like deep learning, can be added to the neural net by adding more and more layers. And I'm going to show it to you visually so you have a better idea of what I mean. Okay, so here's a typical neural net node. This is a classical example. It's called a backpropagation node. And as you can see, there's an input layer. There's a hidden layer, which is that black box area I was talking about. And then there's an output, which is where we get our forecast. So in terms of markets, we're going to have input data coming into this side. There's going to be relationships made in this middle layer, and then we're going to get a forecast as to whether we buy or sell. Okay, here's a real simple neural network, and it's based on the trading system I'm going to show you that my colleague developed is based on this. Like I said, it's very simple, but it demonstrates the point well. So we have two inputs here that are coming in, and this is going to be the data inputs. Now, as far as what type of inputs, they can really be anything that you feel has predictive value to the net. So, I mean, it could be just price data, could be, you know, anything you think is relevant. Now, what happens is once that data goes in, it's given weights. And the weight section is where these little W's are at here. And so it's adjusting these weights on there to see how it's affecting, how the decisions that the neural net makes, or the output, is going to match up with the previous history. So once this is determined, we get an output, which is this O over here. And so it'll give us one of two numbers in this case. It's going to be a 1 or it's going to be a -1. So the 1 will be bullish and the -1 will be bearish. But the way it comes to that conclusion is all in this hidden layer here. Okay, so the input layer, let's, just like many things in life, for the forecasts are as good as the data fed into it. And this goes for whether it's biological or whether it's a computer brain. Collecting, selecting, and preparing the data are all important. There's actually people that are data scientists that their entire job is just to scrub data for neural nets. And they go through and they try to determine what data is going to be the cleanest and also what has the most relevance to what it is they're trying to forecast. They're not limited to single market data points or technical data points. I mean, some people think that that's the case, that you have to have just you know, the standard open, high, low, close data points that are used for the neural net for forecasting market prices. That's not true. You can use it, like I said earlier, really anything that you think has some value in prediction. I mean, this can be open interest, intermarket data from other correlated markets or non-correlated. The standard open, high, low, close, fundamental data. There's actually a number of firms now that are taking fundamental information from newspapers, converting it into a numerical set of values, and those values are being introduced into AI for one of the inputs for prediction. You can also, of course, use technical indicators and various other types of statistical predictors. So moving on to the hidden layer we discussed, this is really the learning computation, the learning algorithm used for the internal processing of the coming up with the decision. So this is where you're going to find the patterns, the relationships in the data, the weights are changing, adjusting, and this is going to happen typically thousands of times before the best value is found, quote unquote best. So this is where you're going to get the conclusions. Chances are that you're not going to get a perfect match with what it is that you're trying to predict, because it's going to take this data, run through it, compare it to what's happened in the past, try to match it up as best as possible. It's basically trying to find a model or a formula that fits, and then find the closest one. But it's generally going to be, it's not going to be perfect. Again, as a human analogy, this is similar to how a human being would, a baseball player might be a good analogy. A baseball player learns how to catch a ball not by computing the trajectory, the gravity, the physics behind it, but by practicing it over and over again. So this, essentially the hidden layer in the brain starts to make connections as to when he moves right, when the ball looks like it's moving towards him in a certain direction, then he has a better chance of catching it. By practicing that over and over again, he becomes better at catching the ball. So this is the same type of system that we're doing here. The information, once it's obtained, is stored in a matrix typically that can be referenced later. And then the neural net makes a conclusion about what may not be known exactly in the future based on what has happened in the past. Very similar to what human beings do. The danger of curve fitting. This, what I just said, leads up to one of the biggest problems with artificial intelligence and neural nets, specifically standard neural nets, in trading. Because the neural net's analyzing a huge amount of data, it starts to try and fit this data as much as possible to what happened in the past. And what can happen is you overtrain the model. And so that's the equivalent of what would be known as curve fitting in a standard trading system, where you're just adjusting the input so that it matches up closest to what happened in the past to give you the best result. Well, most of us that have worked with trading systems, built them, traded them, know that in the real world that usually doesn't work that way. So we try to avoid curve fitting as much as possible. So there's essentially an optimum number of these neurons in the hidden layer that are going to make this neural net, this AI, work the way you want it to without overfitting. So when it comes up against something new, it's going to say, okay, yeah, we had a close relationship, but so this is probably the best way to go, but it doesn't specifically look for something that is occurred in the past that may not happen in the future. The too few neurons is another case where the brain doesn't work properly. So you have to find this balancing point where you have the right number of neurons so that it can take that data and come up with a good forecast into the future. So the output layer is basically just what it says. It's the results that come back out to produce a forecast. And what it's doing is it's taking that output and it's also feeding it back into the input in many cases. That's one type of way of doing it. So you can use the output to test and verify the accuracy of the forecast. And then you can also test it against data that wasn't part of the forecast, which is typically what you want to do. And then it actually can be learning from both the new information and the old information. And so this is a better way to train the neural net. And usually that's what most people do, whether it's trading or whether it's really any other type of game scenario where there's winner or loser, or for that matter, anything, any type of picking up a dish. If you're a robot and the dish doesn't fit what you've been programmed to know as a dish, but it's a certain size, you're going to have to be able to handle it, pick it up without dropping it. So these are the same type of situations or problems that AI deals with that's not trading based, but it's universal. Okay, so just let me go ahead and show you here the system that my friend Mike Bryant built, and he was using that simple neural net that I showed you earlier. And what we did here is we trained it on daily data for the E-mini S&P 500 using 2 years of data. And this is just price data. We didn't use any price and volume. We didn't use anything else. And so for the trades, we deducted $75 for each trade for commissions and slippage. I mean, Of course, it would be high for commissions, but we figured in that would be a good padding for any type of slippage that may occur on the trades. So we optimized 9 of these network weights. The results were either +1, -1, or 0, which translates to buying, selling, or not doing anything. And we came up with just under 20,000 optimization trials. This took about 1.5 hours. And so just to show you what kind of results we got. I mean, I'm not suggesting that this is necessarily the way to do it. It's just an example that you can build a trading system with a neural net. So we had a net profit here of 17,700 based on 99 trades. Percentage profit was slightly over 50-50, and average trade was 179. Max drawdown was 6,813. Out of sample results. So this goes back to what I was saying about testing the neural net with information that you don't have from a historical standpoint. It's actually walking forward, and you're looking to see how it performs against what you've trained it already with. So we see the profits down, but it's still, we still have a profit, 12,000 plus 51 trades. The percent profitable is higher at 55. Average trades higher, 252, but we have a higher max drawdown. So the point of this, the reason why I'm showing it to you, is not to say that this is the trading system that anyone should be using. It's just to demonstrate that by using a simple neural net that's actually forecasting, that you can actually make a profitable trading system. So this comes to the Tradeview approach to AI, and this is something that this is the way that I look at the world as far as using artificial intelligence for trading, and also my colleagues at QuantTrade. So what I think that neural nets are really good for is optimization, more so than actually predicting the future itself, at least at this point. And what we developed is a type of computational metanet. We call it fractal. It has nothing to do with fractal prediction, but it's fractal because it has a large number of self-repeating nodes. And what they do is they take various different systems and algorithms in each one of those nodes, and then the artificial intelligence of the metanet, of the fractal metanet, converges on the best algorithm with the best system based on the current data. And again, that data can be whatever it is that we want to use. So the other nice thing about this is that it's looking at the relevance of the data itself, how it's influenced the different trades in the past. So this way, you don't necessarily need as much information to get good results, and you avoid the whole curve fitting problem altogether. So we call this MetaNet Autorelation Analysis, or AURA, and it can be used to find the best combination for really any types of algorithms. So what we're doing here is we developed a portfolio analyzer that takes a group of different commodity markets, and it takes a group of systems and a group of the predictors that we have, and then it determines, based on what I had mentioned earlier, what's performing the best based on the current data, current market conditions, whether or not it should enter or exit the trade. And then also, we use the same method for predicting the price into the future. So the results have been very good, and what I'd like to do is I'll be finishing the presentation shortly here with the PowerPoint. I'm going to bring you over to a virtual machine and show you the actual software and what it looks like when we get the results. One of the things I also want, yes.
Just real quickly, I just want to make sure we can do a quick sound and visual check. Everyone can see Eric's screen okay and hear us okay. We had a couple of folks chime in with some audio or video issues.
Oh, I see.
Okay. We're all good, man. Thank you.
We're all good. Okay, great,
We're good.
great.
Thanks.
Sure thing. Yeah, I just wanted to finish off by this slide by saying that I'm a firm believer in supplementing the artificial intelligence with human intelligence. And as funny as that sounds, but it's really becoming an important issue now, because artificial intelligence is becoming so ubiquitous in our society. And I feel that it's a great supplement and tool, but it's also something that should be tempered with the human analyst and the human trader, so that they make ultimately the final decision. Because, as I mentioned earlier, artificial general intelligence, which is what everyone's really striving for, is not quite there yet. So, I would say that you still have to take your experience and use your what just appears to be simple common sense in conjunction with the artificial intelligence. Okay, so what did we conclude by this this presentation here today? One is that just from that trading system that Mike had developed, I think we can firmly say that you can use AI to build a trading system. And I feel that once you see what I'm going to show you with TradingView, the software that we use, you're going to feel that it can be a real asset to a human intelligence analysis system. So one of the things that I want to point out is that when we did the trading system test, the out-of-sample results supported the optimized results on the historical data. And this is something, if you run across an artificial intelligence program and you're interested in it, just keep this in mind. This is really important. If you're starting to see that the out-of-sample tests look different, whether it's bad or good, I mean dramatically, something that raises a red flag, then that means that there's probably some sort of overfitting going on. But in this case, it was close, and I feel that that adds credibility to the AI trading model. There also appears to be, as far as a point of what we might consider a problem with using AI as a trading system, is the amount of data that you need to use so that you can avoid the overfitting issue. Now, with the Aura software that we use, we've eliminated that problem as much as possible. And as the deep learning methods continue to develop and expand, we're going to see that this is going to be less and less of an issue. So the bottom line here is that the AI is definitely an advantage to the modern investor or trader. It doesn't matter what the time frame is. And certainly as the technology continues to improve, you're going to see better and better trading results. And I mean, who's to say that at one point all of the trading advisors are going to be robotic AIs? I don't know. We may reach that point, but there's definitely something there. So on that note, before I move over to the virtual machine, I just want to say that there's more information available at TradeviewExchange.com, and you'll also be receiving a link to a PDF of this presentation and a landing page that explains how to go to our site and some of the things that we're doing. So you're welcome to contact us for any more details. And let's move on, and I'll show you what it is we're doing. Okay, I'm going to go ahead and end the show for the time being. I'll put that back up later once we finish here. But okay, this is a chart using the Aura model that we have. So here to the left, you see where it says model. There's a number of different futures markets, and what I have up here right now is corn. So the dark blue price here is the closing prices of corn, how it's performed in the past. The red is how the prediction that's being made by the AI for the future price. So as we see right here, we're expecting corn to go up over the next few weeks. So we should see if we were to go in right now, or we should see a profit at the end of the 4-week time period. But because we're forecasting a downturn, it would make sense to wait. The blue line indicates how well the prediction compared to the actual. So you can see how the prediction was in the past. Now, what's also happening here is that we have a range of error, and that's the yellow lines that are displayed here. So the range of error gives the basically it's a probability cone or curve that tells you that the the price, there may be an error in the prediction, but it's going to fall most likely within that range. One other point that I'd like to make is that as we go further out into time, the prediction becomes less reliable. So that's why we're adjusting as we get new data that comes in on a regular basis from the market. So let me just go ahead and show you a couple of things here. So we take, I'll just randomly take a market here. For instance, let's take gold. Okay, so here's the forecast for gold. And I can go ahead and do this over a different number of markets, lean hogs. Let's take a look at sugar. And so you can see that it's generating different types of forecasts here. Soybean meal. Now, one of the other things that we do here, and this is also available on the Tradeview Exchange, is I'm updating. You see it says it's searching for the best model. We have, one second, please. We have the ability to go ahead and change the forecast length settings. So right here we have this set for 4. This is all on weekly data, and so it's set to predict 4 steps ahead into the future. And I can change this. I can go out to as far as I want, but of course the further out that I go, I'm going to have less reliability on the forecast. Typically 3 to 4 seems to be a range that's useful. Also, once the forecasts are made, a chart is generated here. And so you can see with the tolerances that we're generating that was part of that graph that showed you that range, they're listed here. And then also you have the forecast listed for each week. So this is what we actually display in the Tradeview Exchange for our members, so that when they go in, they can go ahead and see each week what the updates are for the forecasts. Now, we also use the exact same type of technology for portfolios. And what we have here, again, is the same list of different commodities. And we have a signal that's generated based on the expert, and the expert being an algorithm, predictive algorithm, and then the strategy. If you recall earlier, I mentioned that we take the algorithm library we have for predicting, then we match it up with the strategy, and then we look at the different data sets, and then we come up with what is the best forecast or the best entry signal based on performance in the past and projected in the future. So right here we had looks like we had there's an oil trade where we just exited. We have these new trades coming in here on corn and cocoa to enter. And now, by the way, this is also based on last Friday's data, just to make a point of that. So we have feeder cattle, which is an entry, etc. Here's an exit. So here's a short entry and some short exits, short on lean hogs. And this is all being done by the fractal computational metanet that's determining what these entry prices or entry signals are and when to get out. So it's completely automated. That being said, I'm going to go ahead and close this, but I'm going to go into the Tradeview Exchange and show that to you. So this is the Tradeview Exchange website, and this just gives you a sort of a overview of what I've discussed. And then it allows you to go into sign up and have membership services. I also post a blog in here where I take some of the predictions and put them out there. And those have been had some pretty good runs lately, and I'll just show you. I'm sort of tooting my own horn on this one. But we've had a post here that shows where we've been as far as some of the trades that I listed publicly. So they were out there from November 8th. And this is all based, by the way, on using the technology that I just showed you. So all of these that say exited are the profits right now from 11.8. This is based on one contract. We profited almost $5,000. So the way that I'm doing this, though, this is sort of an example of the human intelligence with the artificial intelligence, is I take a look at the entry and exit points from the portfolio optimizer. And then I go ahead and take a look at I verify that with the prediction going into 4 steps into the future. And then I look for correlation there. So I'm using some of my own judgment to decide whether or not I want to go into that trade. And then I also discuss the fundamentals with some of our experts here that have been trading with fundamentals for many years. So that's where I come up with a conclusion as to whether or not I'm going to get into the trade or not based on the AI suggestion. Now, that's not something that you would have to do. You could just follow the AI inputs portfolio optimizer verbatim, and you would have a successful track record. But this is another service that is offered by the Tradeview Exchange. So the idea is to present some useful information to people so that they can improve their trading and help them out. But that said, that's really what I wanted to show. So Jason, if we have any questions, I'd be more than happy to go ahead and do my best to answer those.
Of course. Thank you, Eric. That was great. One question that's coming through is, how long has the system been operational in a live market setting? And if you covered that already.
No, I haven't. Okay, so yeah, again, it's not really, the word system. It's really a combination of many systems, but we've been using that portfolio optimizer since 2012 internally. So it's been we first released it in any kind of public forum earlier this year when I put the Tradeview Exchange together. And one of the reasons that it was released through the portal and just as an information network is because we had some beta testers with the software, and there's a lot of complicated features to it. So we just thought it would be a heck of a lot easier if we just do the internal setups for it and all of the administrative work with the software, and then just post the results on a regular basis. So that's, I hope that answers that question.
Okay, perfect. And speaking of the results, is there a scorecard or a tally of all the positions taken and then exited over the course of the last 30 days?
Yes, I have that. That's what I'm doing. As a matter, it's a relatively new service, so the trades, I can provide that information just from the actual computer portfolio, and then it'll print that out so you can see the exact details of the signals. But I post those live inside of what I call the long shot report, and so I put some out publicly on the blog, so you can go through the blog and see them. And then I also have a running list that's in the long shot report for our members, so they can see, they get all of the different trades that I put out in there, and also they're able to see how they performed historically. One of the features that I'm adding within right after the holidays, and this was some input from a couple of our subscribers, is basically setting it up like the long shot report in the form of a spreadsheet, so that you can go ahead and see, if it's an option trade, what the premium was, versus the actual price of the contract, and so all the data is transparent there. So that's what we have right now. And if the listener is interested in some of the reports from the portfolio optimizer on Aura, I can go ahead and provide that. If he can just send an email over to info@tradeviewexchange.com, I'll make sure it gets to him.
Perfect. info@tradeviewexchange.com, and that's actually right there at the bottom of Eric's slide that he has up right now.
Correct.
One other question that's coming through just regarding fees and costs. Someone wants to participate or sign up. What is the cost and what are the fees?
It's minimal. It's basically just enough to cover the cost of supporting the site. So it's you can subscribe monthly, and it's just under $20 a month. And then there's also a yearly subscription, which is slightly less than than 12 months. So the concept here, just in case anyone's wondering why we did this, is one is that I just kind of got, well, let's just say, you know, I felt that it was important to put something out that is substantial, that really has some value for traders. And then the other part of our plan here at QuantTrade is we want to, after an extended amount of time and after we've, you know, proven that we have what it is we say we do, we want to go ahead and open up a pool based on these results. So this is a way, this is sort of a precursor to creating a commodity pool operator or commodity trading pool. So if they want to go ahead and subscribe, it's simple. Just go to the website and click on subscribe, and then you can see there's also a free trial there. So it's you don't have to, you know, for some reason you don't like what you see, you can just cancel it at any time during the trial period.
Perfect. Perfect. Erica, that was great. Thank you very much. The folks that are asking about the links will, of course, include those in the follow-up email that we send out to everyone. And Eric, if there are any additional resources, I didn't mention this at the outset, but we've had the privilege of working with Eric and QuantTrade across a handful of fronts, one of them including an ebook that we're looking forward to getting out in the market. We don't have timing around that just yet, but we've had a chance to take a very close look at what he's brought and the systems and tools that they have. So we're very excited that you all had a chance to look at this today. Any additional links or resources, we'll be sure to include them in the email. And then, of course, as promised, this is being recorded, so we'll have that as well.
Oh, Jason?
Yes,
I just wanted to add, and I think you already covered it, that in the link that you're sending out after the webinar, I went and put up a one-page, a landing page that has the link to the subscription and also just a quick overview of Tradeview Exchange. So, and the PDF download of the webinar PowerPoint. So that will be that should be available to everyone at the webinar as well.
Fantastic. That's great. We'll include a link of that.
Great. Jason.
All right. With that, Eric, it doesn't look like we have any additional questions, at least not right now. I know folks are moving on with their Thursday. If we don't connect sooner, thank you for joining us this afternoon, everyone. Wherever you are in the world, we hope you are able to have a great rest of the week trading. If you're recognizing the holidays coming up here, we hope you have a great holiday season. So, Eric, as always, thank you very much. That was great. And I think we'll call it good right there.
Great. Thank you, Jason, and happy holidays to everyone. Take care. Be safe.
Perfect. All right. Thanks. Bye.
Bye.